Hello guys, welcome to the Train Parrot. It's been 10 candles in a row on the 4 hour that we are testing the support at 62k. And as you will expect with such a sideways price action, there are formations of heavy liquidity currently being placed. Indeed, as I'm recording this video, from where we are up until 61k, there is a big cloud of liquidity right there from the longs that are exposing themselves heavily. I want to talk about this. I want to talk about still the potential of putting a high for the price. We'll talk about this CME gap that formed yesterday on the 1 hour. We'll touch base with the previous week one that we have and the one we have at 54k as well. Of course, we'll cover the liquidity in today's video, and if that wasn't enough, today guys, I'm going to release one of my best alphas using high block capital. In this particular video, almost a 90% of the time, find the next move for Bitcoin. Make sure you watch the video until the very end and let me know if you are actually interested in learning advanced alpha in this channel. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell so you get notified every time I put out one of these videos. And yesterday we were this close to make 300 likes. We made it to 287. If you haven't given a like to the video yesterday, I will really appreciate if you do. Make sure that you don't miss the section of the video where I'm talking about the alpha to do with gold. Gold is in the process of testing support and it might break down, which might confirm our forecast for the next leg up of Bitcoins. Let's get into the content. This morning, as usual, at 9 AM, I posted my update covering the 4-hour daily time frame and the liquidation pulse, which is typically the most important thing that you want to know in the morning to see how the day is coming. Make sure that you're following me either on Telegram, Twitter, or Instagram to get these updates. Here's another example. I break down the thesis of a next leg up for Bitcoin. This includes an analysis covering the dollar, gold, the Fed liabilities, and the global liquidity index. It's been 10 candles in a row that we are holding above the CPR monthly level. Whenever I see a price action this sneaky, I immediately think going sideways means accumulating liquidity. Sometimes the delta doesn't move, which means that both the liquidity that we are forming on the top or at the bottom are in a balance. But increasing the open interest in such a tight range means that we should be expecting an impulsive move. If you want an example, just focus on what happened in the previous area in here from the 4th of October, 2 days in a row. In a similar fashion, eventually we broke out, and after being constrained in less than 1% of a range, we did a 3.8% move, which was within the same range of what we saw before. So at the moment, we are talking about a potential move up that could take us back into 65k, or a potential move down that can take us into 57. So far the price is not giving any indication, and we have both bullish and bearish patterns on the 4 hour. As I've been doing from this morning, I'm monitoring the liquidation pools. Where are we accumulating the most, and whether we have accumulated enough at the top of the range so we can fuel that move into 65k and eventually hit the 67, which is the largest in the closest proximity to the price. When we did the calculation on the price, that was giving us a potential move into roughly 59.7k. If we were to dump there, I remind you that at 57 is the largest liquidation pool, close to below 60s. But when we calculate the target using RSI, extending this high in here and assuming that we do a final bounce to 50 and we fall from that level, that will take us into 32 RSI. And 32 RSI at the moment is at 60.5. That means a trip more or less around the center pivot of October. That is precisely where we came from in the price, and that will mean undoing all this move to the upside. Hopefully we don't end up doing that, because that will pretty much confirm that all of this move was just a dead cat bounce as we were talking before. Daily at the moment is back below the level of support of the yellow line. This is a live candle still, so it's not confirmed. A reminder that since early September we had managed to put a bullish structure in the price, but now that is at risk, because if we don't manage to make a higher high here above 66, getting into the 67K, then we are confirming a lower high. That's half of the story to get into a bear structure on the daily. If we put a lower low, then we get the full technical narrative for breaking once again the bullish structure and turning it into bearish. We have a few tricks under the sleeve that I want to mention. Two of them are coming from CME gaps. Unfortunately, this is also kind of a mixed bag. We have formed on the 1 hour a CME gap located more or less at 62.6. So if we were to dump in here, we will keep this CME gap as a magnet to bring us back up. And if you want a little bit further hopium to survive for the rest of the week, we also have in here a CME gap that we left from the previous week. This one spans from 65K to 66.1K. Sure, if we go a little bit further back in time, we still have the 54 to 54.5. And in my opinion, if we were to go to that 57 and touch that liquidity, I will start to get a little bit concerned if we were also to go and close the gap at 54.2. So yes, these two bullish CME gaps that we could possibly leave open if we were to make a move to the downside are two great arguments for the price to come back here. So far we don't see any distribution. Now we are at 0.54 in the ratio between deposits and withdrawals coming from large whales. That continues to be the best thing that is currently happening. We are seeing a little bit of selling here on the long-term holders. This happened on Monday, and it's the first time that we have this sort of selling. You can see it better like this. So what we need to do next is to look into these liquidity pools to understand in all this sideways price action that we have had from the 7th of October, 2 days ago, how much liquidity are we accumulating when we are using the scalping chart on Trading Different. By the way, there is a discount to get this product in the description. You can see precisely what I was talking about before. As we progress in here, just holding at the same price of 62K, longs and shorts are placing their bets. In the beginning, they were mostly longs accumulating stop losses in here. When we zoom in a bit more, you can see that the longs have accumulated a lot more in the closest proximity. These are typically high leverage positions, starting with some of them being 100 leverage. Here we have 100 together with 50x. We also have some 25x and some 10x. So there is an argument for the price to at the very least come and grab this green area in here. The shorts are accumulated, but they have been placing their stop losses quite further away. The price needs to go to 65 to target them, and only a small amount of them are exposed at 63.3 to 63.2. If we zoom out enough, you can see that 67 continues to be the most attractive level in the closest proximity, at least in the scalping chart. If we go to the swing chart, we can see the big picture. There's consistency, the 67 and 68 largest levels of liquidations. We broke from the ascending wedge and we are on our way down to 57 according to this pattern. I remind you that I say that if we hold this level, this could turn into a failed attempt to hit that 57. There is not enough liquidity in here to attract the price compared to what we have in there. But on 61, I think it's a low hanging fruit with high value at the moment relative to what is in this proximity of the price. So price is gonna have to decide whether to close the CME gap at 62.7 and then target this, or the opposite way could also play out. Just be aware that there are those two incentives very close to the price. The 62.7 CME gap just formed on the 1 hour, together with the scalping liquidity that we have formed yesterday from stop losses of degens with 100x, 50x and 25x. That's evident as well if you look at CoinGlass, which is actually for free when you using the 1 week chart. From point of view of fair value gaps, there is a preference for the price to go and target the area starting from 64.5 all the way to 65.7. We continue to have significantly more ask liquidity right above the price relative to what we have as support. I'm gonna read the levels. If we start going up from where the price is, we have 33 million, followed by 23, 44, and 21. That is close to 100 million in ask liquidity in a range of 3K. Whereas below the price, we have 25, 22, and 25. So maybe not half, but still less bid than ask, unfortunately. The purple wells continue in this slow buying in here, nothing as significant as before, and the largest wells, the brown ones, are still selling. We haven't mentioned this in a while, but when looking at the order book, remember when we went to 49 that we've been talking almost on a daily basis. What are these orders doing here from 46 to 48 in buying? At that same level, there are liquidation pools. So either these are the actual liquidations or traders that want to counter trade when these people get massively liquidated, assuming that we ever go to those levels of 46 to 48K. What's different in the recent time? Well, with 1st of September up until today, there are a few sticky levels that are even beyond that at 45, 44, and a new level at 35.9. I'm assuming that those ones are trying to fish for a black swan event. In case it happened, they might get lucky to enter on a trade at a very discount price. Closer to the price, if you wonder, we have that 58 with some decent bid liquidity of 700. And as I mentioned before, today I want to cover new alpha that, guys, I hope you are going to appreciate. In this video, I'm going to leave you a link to copy this chart so you don't have to break your brain trying to figure how to configure it. You're going to be able to use this chart not just on Bitcoin, but on any crypto coin that you want to use. You're going to need an account on High Block Capital. I'm going to leave you a 15% discount in the description. If you don't want to get the account, don't worry, I'll be covering this chart in my future videos, so you don't have to get an account either. So I have configured this chart in a very interesting way. I hope you don't get overwhelmed. I'm gonna go and explain what are the most important parts. First of all, we have liquidation levels in the chart. This is a daily time frame chart, and we can see liquidation levels depending on the level of leverage that they are using. We got first longs and shorts with high leverage. Those are the ones displayed at the moment in the chart, but I'm gonna also enable the medium leverage. That's gonna bring in a few more levels, and I'm not gonna enable the low leverage because that's gonna make the chart just too messy, and I'm more interested in liquidating high leverage users. Those attract a lot more the price, and at the moment, as you can see, we have this leverage from 65.7 to 64.3. That's a big chunk from all the shorts that enter here with high leverage, and that is what's currently attracting the price to get them liquidated. We already have a big spike that took some of them off, but we still have 3 more levels in here if we wanted to continue with this move to the upside. Of course, we talked in the early video that there is some incentive in here. There are some doubts that we can get there, but at the moment there are those levels. Those are the largest ones. Below the price, I have highlighted the only one that has high leverage, and that is roughly a 57K. We've been talking about that level whenever we cover trading different. In the swing chart, I remind you, this green in here is that 57. So the price to get to that big chunk needs to make a move of 5K. From here to take the next level up, it only needs to make half of that move, 2.7K, and to consume it all, 3.4, which is still less than 5K. That is just the first argument towards the price continuing higher. Next, we have the Wells versus retail delta. This is just additional information that I love to have. I want to know if the positions that they are happening in Bitcoin in here, if they are mostly small or large positions belonging to Wells. That only happens when we are in the green. That's when you get all those positions from Wells. You can tell that after we reach a top, they pull out, they take profits, and immediately who's left? Just the retail. It goes back into red and the price dumps. Same in here, they took all this rally led by Wells, and then they pull out, and then they crash the price once again. That's why I care about this indicator, and at the moment it shows more retail. So from the point of view of that indicator, it's just a neutral zone. We cannot use that one for any alpha today, but maybe another day. Next, we have the global longs and shorts. Here I'm only highlighting the longs, and when the longs reach a very high level with the price also crashing, that typically marks a bottom. And the opposite, when we get too little longs and the price is rolling up, is because they are pulling out and we are about to mark a top. At the moment we are neutral on that one. I also monitor the open interest. I really care for big moves down or big moves up of the open interest. We need to interpret this as positions have been closed, and then we need to infer if that happened mostly to longs or mostly to shorts. At the moment we are also neutral on the open interest relative to the past months. The next one is extremely interesting. This is just a count of the number of liquidation levels, and whenever they are very high in the green, it means that longs are exposed with too many liquidation levels. And whenever we are deep in the red, it means that the shorts are very exposed, much more than the longs in terms of counting those liquidation levels. It's not about the size of the positions, neither the level of leverage, it's just counting the levels. And last but not least, and this probably is the best alpha, if you use the global bids and ask ratio, you can see that in the past 6 months, when we were around 73.5k, the all-time high, we also did almost an all-time high in level of ask liquidity. And every time we reach a new top in the price, we have reduced the amount of ask. This means that the shorts have been stepping back, leading the way for longs to enter in the market. This is not the difference. Even recently, 25th of September, we reached this level of ask following this trend line in here. Something that you're not gonna find in any other channel, and it's proving to me to be quite an interesting alpha to follow in the upcoming days, not just on Bitcoin, but also a very similar pattern is happening to many of the altcoins. So here's the thing, the alpha works in this way. Whenever the bid crosses the zero line and it goes into this green area in here, it means that longs are aggressively enter in positions. When that at the same time is happening with tons of short liquidation levels present in the market and with a spike in the open interest, the way we can interpret this is that many shorts are already in a position, the open interest increased, and the longs are aggressively entering in an area that could form a bottom. And it could become a bottom just because suddenly it became more attractive for the price to go higher. You can see in here all the high leverage that enter from 63 all the way to 59k. And these longs are very well aware of that, and they just smash the shorts. Notice as well that eventually when they get back into 64.8, they pull out. They are no longer in a long, and the number of short liquidations start decreasing. That means that we have partially run out of that stimulus for the price to continue going higher. Can it continue? Yes, but it starts rounding down for a potential reversal. And that's why they close their positions early. Once again, the bid comes back to the support. I interpret this as shorts have entered up until a point of exhaustion again. They shorted here heavily, then they were able to short just this amount, not lower, because the opportunity ends right there. Same happened in here, and the opportunity for the shorts starts becoming less and less attractive. If we were to now put a high, I will expect to get to the level of around 7. That will be the point where you should be considering, if you are on a swing trade on Bitcoin, to start pulling back out once again, just because we have a trend line in here. I'm not saying we cannot go beyond that and break out, but a safer area is as you approach this and you start seeing that these candles go away, that means the bid is pulling out and we might be for another move in here where the ask comes back in. If that ask comes back in, it might find support once again in this trend line. I don't use the bid and the ask by itself. I look at this alpha and I search for sources of incentive for that to play out properly. As I mentioned before, how many shorts are exposed, or how many longs are exposed, what is the current positioning of the global market in terms of longs versus shorts, and how large are those positions coming from the wealth versus retail. All of that really matters and can make a whole picture for a safer entry. Guys, if you open the description down below of this video, you're gonna find discounts not just for High Block Capital, which is the website I was just explaining the alpha, this one in here that you get a 15% discount if you use my referral link, but you can also find the best discounts for different exchanges, starting with OKX, Bybit, and Binance. If you are interested in the most advanced trading bots where you can do backtesting even in the 1 minute time frame for 10 years of past data, decide between doing backtesting locally or in the cloud, I do recommend that you have a look at Ganium. You can get 36% discount if you use the link in the description. I'll see you in the next one. Bye bye.